And the thing that we want to talk about today is the earned income tax credit, the earned income tax credit, which was put in place some 20, 25 years ago. And we've got a ton of people who are taking advantage of it, but we also have people who aren't taking advantage. In fact, the most recent data tells us that over last year, there were $62 billion in federal tax credits claimed. 27 million people claimed it, but 20% of the people who are eligible for it did not claim it at all. So what we want to do is we want to hit some of those people who are in that 20% range, and even some of those who may have claimed it but may not have necessarily known exactly what all was taking place there, so they have a sound understanding of what the earned income tax credit is all about. That is money coming back to you.
Yes.
Yeah.
Me.
The money coming back to you. So the earned income tax credit is a credit that certain families who are low to moderate income would qualify for based upon the size of your family, the number of children that you have in your family, the amount of income that you may have. You could potentially qualify for the earned income tax credit. So if you think about sitting down with your preparer in the coming weeks, mention this to them.
Okay.
Are you making sure that if I do qualify, that you are giving me a chance to qualify for the earned income tax credit? The earned income tax credit, the ranges in terms of what you can get back is anywhere in between $487 to $6,044 for the next tax year.
Yes.
Now, I think all of us can use a little extra money, and that would sound pretty appealing to all for those that may qualify. The way that the tax credit works is as you are filing your taxes, you want to make sure that you mention this to your preparer, and then they will put together the paperwork that you need to actually complete the whole qualifying process for the earned income tax credit. Earned income tax credit is based upon the size of your household. So let's take, for example, if you have no children, and if your adjusted gross income is less than $14,000 for next year, the maximum tax credit would be $487. Now, if you've got 3 or more qualifying children, your adjusted gross income must be less than $51,567. And then your maximum credit would be $6,044. So it ranges all across based upon the size and your income. So there's a whole table that kind of takes you through that. This is not money taken out of your income. What this is a recognition by our policymakers on the federal government side that there are certain families that need an extra boost. The income isn't where they may want it to be. So this is another way of adding income back to you through this tax credit that you may qualify for. Okay, so that would be the dollars that you earn after all of your qualifying expenses. So any dollars that I come in that are from wages, tips, anything that you would consider salary, net earnings from self-employment, actually employer-paid disability benefits will qualify, or any other form of taxable pay that you receive. However, you can also receive, you can apply for the earned income tax credit if you receive income from SSI, the Supplemental Security Income, or Social Security disability insurance benefits that you can receive it that way. Now, you cannot claim the earned income tax credit on what we consider passive income, or income that you don't actually earn. What is passive income? That would be income like interest and dividends. You couldn't earn the income.
So the money that's working for me,
where
can't
you've
get
actually
that.
worked and actually, then you
I have to put in the elbow grease there.
Right. Social Security or railroad benefits would not qualify. Pensions and annuities don't. Alimony and child support do not. Workers' compensation, unemployment compensation, welfare benefits, veterans benefits, and gambling winnings would not qualify. Let's keep it. When you talk about a preparer, and I am a huge proponent of getting your taxes done professionally.
Yes.
Professionally.
Yes.
Professionally. I say that with emphasis because someone who does it 1 month a year, 3 months a year, as a side hobby, probably you wouldn't deem them as a professional at this. They may know something about it, but if you really want to make sure that your taxes are done professionally and done in a manner which will protect you, go to someone who has experience at this, who understands all of the changes in the tax laws. Those are the people that you want to rely on and can give you good advice of how to apply for the Earned Income Tax Credit and any other credits that you might qualify. To get someone who knows what they're doing, there are actually resources that are free in our community.
Really?
There are resources there are IRS trained tax preparers who are free right in communities all across the country at places called VITA sites or Volunteer Income Tax Assistance Programs. Volunteer Income Tax Assistance Program. There is a program even here that is very successful at providing great tax preparation services called the Metro St. Louis Tax Preparation Service. So what they do is they'll sit down with you and they'll give you a list of the things that you need to bring in preparation for your taxes, and then they'll walk you through, prepare your taxes, file them for you at no cost.
Nice.
At no cost whatsoever to you.
That's right.
So look for that. Now, you've also got places out there that will charge a fee. I'm not in any way disparaging what they may do, but let's keep in mind if someone is charging you $500 to prepare an easy form, that's not the best use of your resources out there. In fact, they're taking money away from you that you have worked hard for and money that's entitled to you. So someone's charging you $800. So when you sit down with the preparer, ask them in advance how much they're going to charge you.
Right.
You want to find out what that pricing is going to be. Sit down with them and make sure that they are understanding exactly what your situation is. If they ask you no questions, then that's someone you need to get up from and you walk away.
Okay.
And if someone sits down and they want to prepare your taxes based upon your pay stub, that's not a person that you want doing your taxes. They're going to promise you a large return, and they're going to keep a portion of your return. They're going to charge you interest potentially on these refund anticipation loans. I want to emphasize that is a loan. You're not actually getting your refund. It's a loan in anticipation that you will get a refund. So you have to be very careful with those that you're dealing with. There are a number of resources in every community. You can just go in and you can Google VITA, VITA, and put your city in, and they will give you a list of the VITA sites that are available in your community.
Awesome.
Only claim those things that you're eligible for. So if you have a situation where last year your ex-husband claimed the kids, and now this year it's your turn to claim the kids. He cannot claim those children on his tax return, and in fact, if someone does that, that's going to potentially put them in a tax situation that they don't want to be a part of.
That does not sound good.
Yeah, not good at all.
Right.
So only claim what you are eligible to claim. The other thing with the Earned Income Tax Credit that I did want to share with, you can only claim this if you're married, if you're filing jointly. You can't do married filing separately with this.
EITC.
To do EITC to get the full credit.
That's very important to note.
Yeah.
Okay. Now, does that include common law? We've been together for a long time.
Legally married. Legally married, not good friends, not buddies, not just housemates, but you got a contract.
I love that.
that says that you are together. For this, and then you also cannot be the dependent of another person to qualify for the earned income tax credit. What you can do with this money, let's say you get the earned income tax credit, you can then take that money and put it into some eligible accounts that actually are beneficial to you from a tax standpoint. That you file electronically. Electronically will allow you to get your refund a lot faster, and even faster than some of these other places that claim that you're going to get your refund faster.
And direct deposit.
And most importantly, direct deposit will allow you to get your refund faster. And then it kind of slows you down too. If you're waiting for a check in the mail, you also have security issues. Someone may, if you have direct deposit, the only way you can have direct deposit unless you open an account.
Yes, we do.
Yeah, when you do these things, it will benefit you, yourself, and your future.
That's what we're here for. Thanks again, Royce.
Thank you.
For more information regarding our discussion today, you can contact the Fifth Third Bank Financial Empowerment Hotline.
And if you'd like us to cover a topic on this program, you could share that as well. Many times, your question could bring forth an answer that helps all of us.